Hey, good afternoon. Today is May 31st, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA indicator here in blue, 9 EMA here in cyan, and a 200 EMA indicator in magenta. We additionally have a MACD indicator down here at the bottom, but we primarily focus on technical analysis, price action, overall market context to enter our trades. Take a second real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when these videos drop. All that being said, let's get right into it for today. I hope that all of you had a great Memorial Day weekend. You can kind of see from yesterday's price action, the market was open for a little bit, not a lot of price action at all. I didn't even bother trading yesterday, but I was excited for today's trading day. As we normally do on this channel, mark level of resistance here at the overnight highs, level of support down here at overnight lows. As you can see by the pre-market hours, prices are trending down. We got a few short-term trends working down, finding a level of support down here at the bottom before pushing above the EMA. You get a separation between the 921 EMA, MACD showing a crossover into bullish momentum. You have this new low here, prices come up down for a first entry short, then prices come up above EMA, down for a second entry short triggers. If you're looking to catch stops above here, you'd place your entry order one tick above this signal bar. Prices come up, you catch all those stops, right out that momentum for a scalp. I finished 3-0 for the day. Two really good trades I got towards the end of my trading session. So we'll go ahead and get right into it for today. This was the first trade that I took. As prices push below EMA, we get a separation between the 9 and 21 EMA here. Now I did mark this as the new high. Prices came down and up for a first entry long. A little bit of consolidation, but it didn't hold much longer before prices pushed down. And there was a second entry long that could potentially trigger above this bar. I marked it as aggressive because we're trading into the overnight lows, but there was a trigger. I had my order one tick below this signal bar, and as prices came down, I was in this trade, stop loss going one tick above this signal bar here, and prices held for just a little bit before I was out for a scalp. I also should have mentioned it before, but MACD had a crossover into bearish momentum, so just riding prices down is just aggressive because you are trading into the lows. Now, most of the morning, unfortunately, wasn't the easiest to trade for one reason or another. As I continued to see prices play out, MACD was keeping me out of some trades. I started to see a lot of overlap, congestion, 921 EMA were flattening out. So there were a lot of trades that I didn't take in here. I really wanted to see prices trending. So as I start to see the separation between the 9 and 21 EMA, we get that contrast, right? And we could continue to see a trend moving down, but then prices would stack up for a little bit, and that would keep me out of some trades. But then as we get MACD crossover into more bullish momentum here, prices are pushing above the EMA, 21 and 9 EMA are starting to separate. This is kind of where I start looking for some trades. Some people would reset the count around here, and prices came up, down for a first entry short. Prices came up, down looking for a second entry short, but I didn't really treat it like that. I kind of clumped this all together as the low. So I was waiting for a first entry short to trigger, and that's what we got here. And as prices kind of chopped up and down, was waiting for a second entry short trigger, never got it. For those that don't play it like that, this would be a second entry short trigger, and then your stop limit order would go one tick above the signal bar where everyone has their stop losses. So people get trapped into that trade, and then prices continue to hold along 9 EMA. You'd be up and out for a scalp. I want to mark it as aggressive, but I didn't look at taking that trade. So I started to see overlapping bars. MACD started to lose momentum. I just didn't want to take that risk. So again, sitting on my hands as prices continue to oscillate here, we get, like a second entry long as prices come down. First entry long, second entry long, but terrible signal bar, close below EMA, not looking to take any second entry longs or shorts. This area, we have both a second entry long trigger as prices come down, first entry long, second entry long, but we additionally have a second entry short with this new low down here. Prices come up and down for a first entry short. Prices come up, down for a second entry short. So we got two conflicting beliefs here. 9 EMA, 21 EMA are flattening out. Wasn't interested in trading any of this either. Prices slowly start to chop up with the separation between 9 and 21 EMA, but we're still in this trading range. And, at the time, I didn't have it drawn like this. I probably had something more like this is what I had. But then as we continue to get this overshoot, prices consolidate more, then prices started to push up again, form somewhat of a double top. That's when I started to expand the range that I had drawn. You can see prices are slowly chopping up, but I didn't see any trades in here that I wanted to take. MACD is also thinning out. Just very hard to trade any of this. But once we get to the top of this range, we start pushing down below 21.9 EMA. Where do we anticipate prices to go? Back to the bottom of this range. We have this short-term trend that's working down with a break, looking for a new low. And so that's kind of how I was thinking about this trade. The way I kind of saw this was we have this new high up here as prices come down. First entry long, prices come back, looking for a second entry long to trigger. And as soon as it triggers, you're going to put your stop order one tick below the signal bar. Now I marked it green. It is aggressive. We have this break looking for a new low. MACD is showing bearish momentum, slight loss of momentum maybe. We're also trading into the lows of this trading range, but we also don't have a close at or above this 9 EMA. So you're keeping your limit order in play as prices come down. You get a double bottom here, and I think prices move if from 350 down to 150. That's exactly 8 ticks. So maybe if you take that, you get out of that trade. Your stop loss is going one tick above this signal bar here. But prices never come back up. You'd be in this trade for maybe a little bit before prices flush down and you get a scalp there. But again, you're trading into the lows. It might be a little bit aggressive. Prices find a little bit of support down here. I didn't have anything drawn, but you can kind of see, we got a little bit of a trading range here. You could argue a little bit of an overshoot down to the bottom of this trading range. That generates just enough momentum to push back up above the EMA. MACD shows a slight crossover here, separation between the 9 and 21 EMA as we start to see prices move up. Prices are not respecting this 200 EMA. If you maintain this idea that we're in this trading range, we're working from the lows of the range up to the highs of the range. So you're restarting the countdown here at the new low. Prices come up and down for a first entry short. Prices come up and down, waiting for a second entry short to trigger. Once one triggers here, you're going to set your stop limit order one tick above this signal bar. And all you're doing is waiting for you have your order there. You're waiting for prices to trigger. And as prices come up, you're catching all those stops. Your stop loss is going to go one tick below the signal bar right here, and you're just going to ride that up for a scalp. That was my second trade for the day. And as prices continued higher, it was very hard to ignore the possibility of prices to continue up to the top of this trading range. We do have this nice short-term trend that's working higher. MACD is additionally showing this continuous bullish trend, this bullish momentum. Now, how am I counting here? So once this trade happens, I'm restarting the count here. This now becomes the new zero. So prices come up and down for a first entry short. Prices continue up, down for a second entry short. As this next bar prints, immediately reverses. My orders going one tick above the signal bar right here. Stop loss is going one tick below. So very small risk bar, only risking 6 ticks. And as prices come up, I'm in and out for a scalp. I had a 6-point runner as well in play, and prices came up to hit that as well. So that had me 3-0 for the day. I didn't see what prices continue to do afterwards here. By no surprise, they continue to work up, and now we're coming back to test the 21 EMA. Now, I just have one runner. If you're getting to the point where you have multiple price targets for your runners, you could be making a lot of money here, because I would have had my first price target filled, and as prices continue to work up, you can get your second price target filled on a runner and potentially a third one as well. Now, let's see if I extend this a little bit. Maybe we adjust the trend line just a little bit to accommodate price actions. Prices are holding very nice and neatly. You can catch that move all the way up. And if you're entering one tick above this signal bar here, we just take a ruler. And even if you're trailing the stop loss off one contract, you could be capturing over 18 points on a move if you play the runner correctly, So big opportunity. I think this area of the day was the best time to trade. Unfortunately, you had to wait over 2 hours from market open to get here. About around 10:30, 10:40-ish time frame, you start to see this separation and prices just continue to move up. And you got to ask yourself, how are you going to capitalize on these moves? Are you going to wait for prices to come back all the way down to the 21 EMA? In some people's strategy, yeah, you are. You have to. You have to wait for that key entry point off of 21 EMA. But what's great about this catching loss strategy is you're capitalizing on the mistakes of retail traders. There are people that are trying to pick tops. And as prices come down, you have people that are selling. They're trying to short, but they're shorting at the wrong spots. They're shorting in a stronger uptrend where 9 and 21 EMA are separating, where MACD does have this bullish momentum. So prices come down, they trap everyone. Their stop loss is going one tick above this signal bar. We catch their stops, we ride the momentum. It's easy money. It is a simple concept. What makes it difficult is practicing the patience. You literally have to sit through a lot of chop and force yourself not to take any crazy trades. But when these moves happen and you capitalize, this is where you make your money. This is where the patience pays off. This is where the practice over the weekend, as you're spending hours focused on learning the charts, This is where it all pays off. This is what it means to be a day trader. So once you got the strategy down, great. You've got the concept. You can understand some patterns. Now it's a mental game. It's a battle that you have to have with yourself and have enough discipline to not take silly or aggressive trades. Every trade we enter, there's going to be inherent risk. There are going to be times where we need to be making split second decisions, but we want to be able to make those decisions with a clear mind, level head, trying to be as emotionless as possible. We focus on trading the strategy, we stick to our rules, and that's where we get the nice payouts. But anyway, that's going to be it for today's video. I appreciate all of you for watching today. I'm going to do my best to post a video for tomorrow and Thursday, but I do have work and may not be able to post both days, but we're going to see where things go. Just be patient with me. I really appreciate all of you for sticking around. We're about to hit 600 subscribers on this channel, and that's amazing. Really glad to be spreading this knowledge and having people capitalize and be profitable on this. So leave a comment on the video. Let me know how this strategy has been helping you out. Continue to give me some feedback. Let me know how I've been doing in these videos. I know I got a few comments over the weekend telling me that I've been talking relatively fast in my videos, and I get that. I've definitely thought about those comments, and I think that's, that's influenced the momentum and tempo of this video for today. But know that I read every single comment, whether it's good or bad. I appreciate all the criticism and positive feedback. So keep all of that up. It really means the world to me. All right, that's it for today. I'll see you next time.